Hey everybody, Brian here. Today is Saturday. It's the 25th of October 2014. Let's look at this market. Pretty impressive numbers this week. S&P 500 gained nearly 5%, or a little more than 4%, 6% for the NASDAQ, which now brings that market up 12% year to date. And the semiconductors bounced back real strong here, now up 16% year to date. So just a very strong week for equities, and it shows again why we have to be flexible in our outlook of the market at all times. We can't just be looking at it and saying, hey, we're in a bull market or we're in a bear market. We're either in a bullish environment or a bearish environment. As you guys know, I rely very heavily for the intermediate term trend on what is the direction of the 5-day moving average and where are we in relation to it. And unfortunately, when I do this on my laptop, my charts get all screwed up. So let's go back for a moment to the 30-minute time frame. And just, right here is where we made the higher high above a flat to rising 5-day moving average. And that's where I said, as much as this market is telling us that we're indecisive here, we have to give the benefit of the doubt to the buyers. And there's been really great strength since then as well. So next week, and boy, is this annoying with the charts flipping on me like that. But next week, what we'll be looking for is, of course, for certain levels of support to hold. Our first near-term level, I think, is going to be, just around that 194 level and where that 5-day moving average is. I don't know how to switch these charts and get them to stick like that, so just forgive me for that. But we're back above the 200-day moving average, right at the 50-day moving average. So, just given the magnitude of the snapback this week, we have to look at this market and say it's likely that we would need to digest these gains either through time, just by going sideways, or perhaps a pullback, even down back in towards this level near the 20-day moving average, maybe 193-ish. Of course, nobody has a crystal ball. What we're only attempting to do is say what are the key levels and trade against those. The NASDAQ, like we said, experienced a very strong snapback this week as well, and it was early in the week that we got to the point where we said we're higher highs and higher lows above a rising 5-day moving average. It's not about picking the bottom, not for me and what we do at Alpha Trends. It's not about trying to guess where the bottom is, but to wait for the evidence to present itself that the buyers have regained control and can maintain that control. So we become optimistic with a rising 5-day moving average and say we want to remain intermediate term bullish while the buyers are in control. And for the the Russell 2000, this is the first market to give us an indication that the buyers were regaining control 2 weeks ago, actually. And even though the daily time frame is heavily damaged, and when we go to that weekly time frame, the jury's still out here as to whether this market is forming a longer term top that is going to lead to a bear market on a weekly time frame. Again, we have bullish environments and we have bearish environments. That's what you need to focus on. Don't be caught up in the labels of bull market, bear market. That's that's good for Warren Buffett and his time frame, but for us, if we're looking to profit from the intermediate term trends, again, the best clue that we can use is the 5-day moving average, and it really proved itself valuable here this past month. And by the way, people say, well, it's only up on light volume and down on big volume. Only price pays. It doesn't matter if we get a 7% snapback on light volume or if it's heavy volume. Only price pays, not volume. You can't take volume to the bank. The Russell 2000, back to the weekly chart here, again, we don't know if this is going to turn into a longer-term bear market. And it really doesn't matter for an intermediate-term trader. What we're looking for, and I keep flipping through these time frames just so it won't unfocus on us like it did there on the 10-minute time frame, and now once again here. So the semiconductors bounced back very strong this week, of course, and we're back into I think 48 being a key level of potential support. Back to the Russell though for a moment, we've got a declining 50-day moving average. If this market can pull back towards 108 and maybe find support in there, that 107 to 108 I think is going to be very important over the next several weeks. As far as holding us for support, financials of course bounced back real strong as well. All of these markets did, of course, except for gold, which continues to be in a longer-term bear market. We've spoken about this ad nauseum, that the fact is we remain in a downtrend, and we could be even forming this a descending triangle here. If we break this bigger support level, then gold could experience a much larger decline. So there's no reason to be involved in gold, especially now that it's back below that declining 5-day moving average. We spoke about bonds last week as well, and again here, this 5-day moving average, we said, listen, it looks like was this a top in interest in the bond market? We simply don't know, but it was definitely got ahead of itself and needed a stronger pullback, and that's exactly what we're getting. So we're seeing that, again, below the declining 5-day moving average, the intermediate term trend is guilty till proven innocent. Back above 121-ish, perhaps that changes, but right now we are in a bearish environment for bonds, and that's all we need to know, is the environment for bonds is bearish at this moment. It can change, though, getting back above 121, but the intermediate term trend says there's no point in buying bonds here unless you want to lose money, and of course that's not the object of what we try to do. Apple continued nicely after earnings, and looking back at this, we were cautious over here but not bearish on it, because of course the longer term weekly time frame is still significantly higher, and it's making a very nice move that we're above a rising 5-day moving average and making higher highs and higher lows. It is extended, but that doesn't mean it's a short by any means. It means that just be careful with new purchases. In this week we saw some disasters for earnings. We saw Amazon down $26 on Friday. We saw CMG down big. We've also seen Netflix, of course, recently get hit hard, and that's bouncing back very strong. But there's a lot of earnings risk still in this market. The biotechs had a really strong. This is now a bear trap, and of course, when you have that happen, you don't know that's what's setting up. But as it gets back above that 5-day moving average, starts making those higher highs and higher lows, it's once again innocent till proven guilty on the intermediate term time frame, and we have no idea of knowing how high it goes. But we know that the buyers are in control, and that's what needs to focus on. So, stocks like Amgen broke out to all-time highs here after this shakeout, just a real nice rally. Barron, real nice uptrend. We've got Gilead, Celgene, all of these big biotechs. I'm long a little bit of this one here, NVAX, which is just retaken its volume-weighted average price year to date, and did so on some heavy volume. And it's looking like that one might be able to continue higher based on this weekly time frame. Another one that you might want to keep an eye on this week in the biotech world, a bigger one, is Vertex, VRTX. Nice tight consolidation. I think you break these highs over here, that it has the ability to continue to follow these other stocks. So keep your eyes on Vertex this week. Let's take a look also. We had another disaster in Yelp, which is in a downtrend, and of course IBM got smashed too. And talk about a blue chip, no such thing. There's good stocks and there's bad stocks. There's good companies and bad companies. There's a big difference between the two of them. It's about timing. Right now, IBM might be a good company, but it's a terrible stock to own. It's at multiple year lows here, breaking significant support, and there's just no reason to purchase down in here. The sellers are still in control. Story stocks like the Triple D, and I love the story of 3D printing, but it's been in a downtrend for a while. They report earnings and it continues lower. It's guilty till proven innocent below those moving averages. Baidu's one that looks like maybe we've got some opportunity coming in it this week. Nice tight consolidation up in here. If they, that which doesn't kill it with this pullback only makes it stronger as we shake out the sellers, suck in new shorts, and if this stock can get back above 223 to 225, I think that Baidu could have a significant upside ahead for it. Speaking of the Chinese stocks, hope you caught that call on Alibaba. I was pretty bullish on that this week as it was crossing back above the volume-weighted average price year to date. I had mentioned it with Jeff Mackey on Yahoo Finance that getting back above this volume-weighted average price year to date would be, I thought, leading to new highs and up towards the 100 level. So we saw across that 90.5 level. It had its first higher high above a rising 5-day moving average in a while. And once it crossed that volume weighted average price year to date, that's where it signified that the buyers had finally wrestled control from the sellers for the first time since the stock has come public. And we've seen a very nice follow through up in there. If you're long the stock, your job is now to manage the risk based on what you think is appropriate for your personal style. So again, we've got, we had a super strong snapback. We're in a bullish time of year coming into this week, and we've still got a lot of earnings reports. So it's a case-by-case study in terms of, are you going to buy stocks that are in downtrends and bet on earnings and be surprised when they follow through to the downside? Or are you going to be buying stocks that are in uptrends and near new highs, and stocks like Now and NetSuite? These are companies that have, there's still significant upside in the market. And the job, as always, is risk management. That's the focus at Alpha Trends. I'm not trying to pick the bottom of the market as it pulls back. That's just stupid. What we're trying to do is say, where is the evidence that the buyers are in control? Let's get ourselves aligned with the trend, and manage risk from there, and have some faith in the definition of trend, higher highs and higher lows, and let the market decide for us whether we're right or wrong. So that'll do it. Oh, actually, you know what? I wanted to point out a tool here on alphatrends.net. This is brand new. If you go to alphatrends.net, we've got this little icon up here under it, which is tools. If you click that, let me just click it so we can refresh this page. I've got a little video about the pivot calculator, and I talk about pivots a lot, as far as oftentimes we see support exactly at a daily S2 or resistance at daily R2. They're very good numbers to be aware of. If you're not familiar with it, then go here and view this. But more importantly, if you take a look at let's say the SPY, what it does is it calculates. You type in SPY, press that calculate, and it'll tell us that based on Friday's close, which was the information for Friday's trading, that is the open, high, low, and close. These are the pivot levels for trading on Monday. This is a free tool. You don't have to register. You don't have to give your email. You don't have to jump through any hoops to do it. Hopefully, it's something that you find valuable. That video right here is a little tutorial about how I like to use them, how they're traditionally used. So take some time this weekend to look at that. And of course, if you haven't taken a free trial, take a free trial for 7 days. I promise I'm going to teach you how to be more consistent in the market and how to look at stocks objectively. Hope you found value in this video. Thanks for your time, and have a good weekend.